QuickBooks Online 2025 Pay Down Credit Card Form. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are online in our browser searching for that QuickBooks Online test drive, the free sample company file available to everybody looking for a result that has Intuit.com in the URL because Intuit is the owner of QuickBooks. We're going to be choosing the United States version of the software. You might have to verify that you're not a robot. I'm going to close this prior tab. Then we'll be in the sample company file, Craig's Design Landscaping Services, opening the major financial statement reports in a new tab as done every time the report's on the left-hand side. Within the standards tab, the favorites, we're going to be right-clicking on that balance sheet to open a link in a new tab. Right-click as well on the profit and loss to open that in a new tab as well. Tabbing to the middle, closing the ham boogie, changing the range to the 2-year time frame as is our custom 010124 tab, 123125 tab. We want to see the years and then run it to refresh it. 24, 25 side by side. Let's tab to the right, do the same process again. Hamburger needs to be closed for more space. We need more room over here. 010124 tab, 123125 tab. We want to see this in terms of years. Run it to refresh it. Nothing's in 2025 except for that $53.99 for some reason, including not having prior presentation transactions because we reset the browser, opening in incognito window so the cookies didn't still pull in the same data, which we recommend you do as well so that we are on the same page or as close to it as possible. Let's go to the first tab. We're going to select the drop down. We've been taking a look at the data input forms, noting the forms are broken out by cycle, customer cycle, or revenue cycle, vendor cycle, or expense cycle, the payroll cycle. And then we're over here in the other section where it doesn't fit. These ones, they're not cool enough to fit in any kind of click, right? They're kind of loners. They're out doing their own thing or whatever, but they're still important. And that's why they're in here where you normally go to enter the day-to-day type transactions. This time we're going to go down to the pay down credit card form. This form being similar to the transfer form. If you recall the transfer form, that's the form we're going to use if we're transferring money between two checking accounts, typically like a checking account and a savings account, for example. You can think about these forms being used more broadly with type of accounts that are connected to a financial institution and therefore bank feeds can be connected to them. And we can extend that then to the credit cards because credit cards, although when we think of bank feeds, we don't think normally of credit cards, they are still connectable as bank fee type transactions because they're handled by a financial institution. Therefore, we can pull in the credit card transactions in a similar fashion as we can with the bank transactions. And in some ways, the credit card transactions are often actually a little bit easier because we usually are just paying for things with the credit card. So we usually just have expenses with the credit cards, whereas with the bank transactions, we have to worry about the deposits and the decreases, and we typically have different kinds of transactions that might be going through the bank accounts as it also weaves through more often other areas of the financial process, including not just purchases, not just expenses, but also obviously on the revenue side, on the payroll side, and so on and so forth. Okay, so what's the purpose of the transfer? So just a quick recap on the transfer form so that will lead us into the pay down credit card item. Notice that these are over here in the other section because they're not really part of any normal cycle. In other words, I don't transfer money from one bank account to another bank account or pay off the credit card as basically part of my normal, cycle. Although hopefully I do pay down the credit card possibly monthly. Ideally, I'd like to use the credit card for a month, get possibly free loan of money without being charged interest and then pay it off before they charge me any interest on it. Ideally would be the situation, which means you might say, well, I have a routine of paying it monthly. But the idea here is that it's not really part of the customer cycle, the vendor cycle, the payroll cycle. we're not really doing anything with it that has to be on a cyclical basis, and we're not using it to basically communicate with people we have to deal with, customers, vendors, and employees, and therefore it's still important, but it's here in the other area. Now with the transfer form, if we took money, if we go to the balance sheet over here, from the checking account and transferred it into the savings account, we noted that we could use, you would think, the first form might come to mind, an expense form. Why? Because that's the form that's like a check form, decreasing the checking account. That would make sense, but we saw that what happens is, although it looks correct on the checking side, it looks funny on the savings account side, because now you have an expense form that is going to be increasing this account, which is basically a type of checking account, right? It's a savings account. That looks funny. The journal entry would be correct. The transaction detail would look funny. Or you can imagine taking money from the savings account and putting it into the checking account, which from the perspective of the checking account, you would say, why wouldn't I use a deposit form? You could. The journal entry would be correct. It would look correct on the checking account, but again, on the savings account side, you would have a deposit form type form that would be decreasing an account that's a cash type account, which looks funny just in terms of the form type. Therefore, we use a transfer form, which could have an increase or decrease, remembering that the transfer form has its own problems, because when I sort the data by increases or decreases, for example, which we're likely to want to do, we want to sort by transaction type. If I have a transfer form, then it could either be an increase or a decrease. It's ambiguous. So it's going to mess me up if I want to sort by just form type to look at all the increases and all the decreases. But it doesn't run into the problem. It would be even worse if I had like a deposit form that was a decrease. That's going to mess me up as well. So we talked about the strategy you might use is to say, hey, look, I'm just going to use the forms that are according to the checking account, because that's my most complex account that has most stuff in it. And I'm okay if the savings account has funny looking forms in it, because it doesn't have as many transactions. It's easy to see what's going on in the savings account. Or I can use, the transfer form, which has that ambiguous form that could be increases and decreases. Okay, well, let's think about the credit card now. With a credit card, note that the credit card basically acts like a checking account in that when you make payments on the credit card, it's still connected to the financial institution. We can still use bank feeds with it. And as we use maybe an expense form with the credit card, and note when we do that, just to check that out, if I go in over here and I was to say an expense form, which is kind of a type of check form, a form that we think of as decreasing the checking account, we could also use that same form for the credit card. So what would happen if I use an expense form for the credit card? Well, that just means we're purchasing something on credit, which is going to be, it's going to be, instead of decreasing the checking account, it's going to be increasing the liability account of the credit card payable. Now, note that you could enter the transactions with a credit card as they happen and then reconcile what you're doing to the bank. But because the credit card is all electronic transfers and typically money going out, then we usually can depend on the bank feeds. So the bank feeds work beautifully with credit cards typically. So most of the time we're not going to enter the expense when we charge it. We're going to let it clear the bank, and then we'll pay it off. We'll enter it as it clears the bank with the bank feed. So do you want to leave without saving? I'm going to say yes. So in other words, if I go into the bank transactions over here, then we can see we have the checking account is the default. We have the MasterCard. So typically the payments would come through the MasterCard here, and we would enter them into the system. As we enter them into the system, it will create typically possibly an expense type of form, which we typically think of decreasing the checking account, but here it's going to be increasing the liability. So if I go into, for example, the detail of, I'm on the income statement, that's the wrong spot, balance sheet, and into the MasterCard over here, we could see the expense forms here are increasing the liability. So if I go into that, we can see this was who we paid, went into a job. This is typically going to be an expense category. Instead of the cash going down, the expense is going up. So that's what we normally expect to be seen in here, expense forms that will actually be increasing the liability if we're using our credit card in this capacity. Now, at some point, what's going to happen is we're going to pay off the credit card, hopefully. And so how is that going to look? Well, it's going to decrease the checking account. So if I go back, we know it's going to go out of the checking account, and then it's going to also decrease the liability account down here. I would typically think of that from the perspective of the checking account. And what's the form I would normally use when I pay somebody off out of the checking account? It's a check type form, usually an expense form, because I'm going to pay it electronically. So I'm going to pay it electronically, decrease in the checking account. Normally that would be an expense form. That would look correct on the checking account side because the expense form decreases the checking account. But when I go down here on the credit card, it's going to look funny because now if I want to sort by expense forms, those are the charges that I'm using. And now I'm going to have an expense form in there that also is the paying down of the credit card. So if I use the expense form, I won't be able to search the credit card detail by form type to look up the payments of the credit cards because the expense forms they'll all be expense forms, whether they're increasing or decreasing the account. So what can I do instead? Well, you can think I could use a transfer form because that would be the same thing. But QuickBooks made another form specific for the credit cards, which is going to be the credit card payment form that will pay down specifically the credit card. This is a bill payment, but we'll make one. I'll make one soon. So let's go back. Now, just a quick note, if I go back to the first tab, normally both of these are going to be bank feeds. So if you have bank feeds turned on, what's normally going to happen is you're going to go into the checking account and then you're going to see that there's a payment for the credit card. It's going to be a spend item. When you go into it, it's going to be a payment for the credit card. And if you just record it as a normal category, it's going to record it as an expense. So hopefully if the system sees it on both sides here and on the credit card side, it will record it as a credit card payment, which is kind of a type of transfer, but it will have a credit card payment form, which will give us more detail. So we want to be careful of that. And then when I go into this side, I will see the payment over here and hopefully it will match to the credit card. We'll talk more about the bank fee transactions specifically in a future course or section, but I just want to point out that's how it's typically going to happen in practice. So when you see the money going out of your checking account for the payment of the credit card, you just want to make sure that you're recording it with the proper form that is according to whatever system that you have in mind. All right, let's go to the first tab over here and let's just get an idea of this. So the first way, let's do it every way so we can see the problems and the pros and cons, right? So if I'm going to pay off the credit card, let's say that I was just going to use what I would normally use, an expense form. That's the first thing that would come to mind. I'm paying something out of the checking account. Let's pay it with an expense form instead of the credit card form, and then we'll look at the difference. So let's say we paid the credit card down, and we're going to say, let's just say it's credit card. I'll just put as a new vendor, and we'll save it. And it's going to come out of the checking account, 120. And I'm going to say the category is going to be, what is it, MasterCard that it was? MasterCard. It's just going to pay down the credit card. Let's just put it for a small amount, like $1 or $2, let's say. So what's this going to do? Well, it's an expense account. It's going to decrease the checking account because that's where we have it pointed to. And the other side is going to go to the credit card. Which is gonna decrease the liability of the credit card. All right, let's save it and close it. And I could go over here and say, let's go to the balance sheet and run it. And so then I'm going to go down and say, all right, let's go into the checking account, check out the checking. And we can see that we have the expense form decreasing. That looks normal. Let's go to the other side, go into the MasterCard. That looks normal. But if I go into to this side and I say boom into here, now I have this expense form and it's not showing up. Let's go back and refresh, run it, and then go back down again, otra vez, And there it is. So there's the $2. So it's decreasing the credit card, which is what we want to happen, but it's doing it with an expense form, which looks funny because the expense form, as we saw when we looked at the detail on the prior month, if I go back to 2024, is the thing that we usually use to increase, right? These expense forms are increasing the balance. So I won't be able to sort or filter by the form type as easily because now both the increases and decreases are using the same form. All right, let's go back. Now notice you don't normally have the other side of the transaction. We saw this on the transfer form. When I transferred from the checking to the savings, I could see it that way. I could say, well, I could record it maybe with a deposit form into the credit card. That's possible to do. That probably wouldn't come to mind. But you could say, well, I could record it this way. Let's make a deposit form and see if they'll let me put it into the, no, they don't let me put it into the credit card, even though it's a bank transaction. All right, that's probably good. So we can't use the deposit form to pay off the credit card, which is probably good. That wouldn't come to mind anyways. I'm just confusing people by even thinking about that. Let's go in here again. Now you could use a transfer form, I believe, instead of the pay down credit card, just to get an idea. Let's say, okay, what if I used the transfer form because they're both, bank type of accounts. So let's say we're transferring it out of the checking account. It's going into, and then we're going to the MasterCard, which means it's going to pay down this one as well. Transfer amount, let's just say is $3 this time. Let's put it on 1 day up. So now it's going to be recorded with a transfer form. So, and so let's check that out. What's it going to do? It's going to decrease the checking account and it's going to pay off the credit card, decreasing the liability by the $3, hopefully. Let's save that and close it and just see what that one would look like if we did it that way. So if I go to the balance sheet, now I can go in here and I go into the checking account and we can say, okay, it didn't do it. Let's go back, refresh it. I told you to refresh QuickBooks. Put, for crying out loud, there it is. So there's the $3. Now it's recorded with a transfer form doing in essence the same thing. Now the transfer form is kind of a problem because again, it's kind of ambiguous. So the transfer could be an increase or a decrease. So when I filter by transaction type, the transfer form can cause us problems. Let's go back and then let's go into the MasterCard on this side of things. We now have, it didn't record it again. Let's go back. It's being, I think it's only glitchy, I swear, on this, on the sample company file. I don't think it doesn't, I don't really have this problem typically in the actual files, but in any case, there's the $3. So now it's recorded with a transfer. So that could be useful. So you might say, they could have left it at that and you could use the transfer form to pay off the credit card because that will at least allow you to sort on the credit card side by the transfer forms, which are kind of ambiguous, but typically with regards to the credit cards, they're only going to be going one way. That's when you pay off the credit card. All right, let's go back up again. And now let's use the form that we're looking at specifically. Let's hit the plus button and say, now we're going to pay off the credit card. Let's use the designated form, the pay down the credit card. By the way, this form is different than the credit card over here, which I believe is going to be used if you had like if you called the credit card company and said, hey, look, you gave me a penalty or something and I'd like you to waive it, and they waived the penalty or something like that, so that so they reduce the amount that you owe them, so you're going to post possibly a credit to the credit card. But here we're talking about paying down the credit card, and so that's going to be over here with the pay down credit card. So it's kind of like a transfer form. So let's say this time it's going to be paying down the MasterCard, the payee, let's just say, what did I say, credit card, boom. And then let's say that how much did you pay? Let's say $4 this time on the 22nd. What did you use to make the payment? Let's say the checking account. So I made a payment with a check. No, I'm not going to add a check. That would ask for a check number. I'm going to say, no, it's an electronic payment, which would typically be the case, which would typically go through the bank feed. So this is like a transfer form, but now It's going to be specific to credit card payments, which means it's only going to go one way, which solves that problem. But it adds another transaction type, which makes it confusing that way. So let me show you what I mean. If I save it and close it, we're going to go, okay, let's go to the balance sheet. Let's run it to refresh it. Refresh it, QuickBooks. Don't give me any glitchy, non-refreshing stuff when I zoom in here. Let's go into that checking account. Better be, it's not there. It's not there, QuickBooks. Dang it. Let's go back. I told you to run it. Get your head in the game. Clear your focus. All right, there it is. There's the $4. All right. So that's great because now I can see it as a credit card payment. And that makes sense because I know a credit card payment should be a decrease. Now, the downside of this is, so QuickBooks is, the bottom line is, QuickBooks is very good at basically making the transaction type forms specific for particular transactions, which can give us more detail just by looking at the form type, and can also give us more options in terms of how we would like to sort the data. Because if I just want to look up in here the payments of the credit cards, I can sort by form type to find just the credit card type form, which is great. However, the downside of that is, what if I want to sort and find just all of the decreases to the checking account? Well, instead of having, the most basic thing would be just have a check form cover all different types of decreases to the checking account, whether it be an electronic transfer, a normal written check, or a payment of a bill that you're paying off, or payment of payroll, which is basically a type of check form. It's a decrease, or payment of the sales tax. All of those have different forms, and now you have a different form for the payment of the credit card. So now if I want to look for all the things that are decreasing the account, I have to remember all of the different transaction form types to make sure to click all of them off so that I don't miss any of the decreases. So again, the detail has its pros and cons with it. So I just want to point that out. So it's just so you know. Let's go back, and then let's go down to the MasterCard and see it on this side. MasterCard, and there it is. So there's the $4 decreasing on this side. Now it's showing as a credit card. So if I go back to 2024, so now we can see that the expenses will increase the liability instead of decreasing the checking account when we incur them, and the credit card will decrease the liability as we pay off the credit card. So note that the credit card, from the standpoint of bank feeds and how it is used, is actually easier than the checking account, but a little bit hard to wrap our minds around at first, because it seems backwards, right? That instead of when you buy stuff, instead of the asset going down, we're increasing the liability. But we can typically do it all with the bank feeds, at least for small businesses oftentimes, which makes it, pretty easy to do. We should still be doing bank reconciliations and whatnot, but they should be really easy to do because we're going to construct our entire books from the bank feeds, because we have like the easiest format usually with the checking account, in that we're using all electronic transfers in order to deal with the credit card. Whereas again, with the checking account, we have all those accrual problems that could get in the way, complicating just making our books from the bank feeds. All right, and we'll talk more about that when we get to the bank feed course or section. Exit without saving. There it is. By the way, if I go back into this and I go into let's go into the checking account again, and notice you have this switch to modern view up top. So if I go to this, it looks like they're kind of A/B testing this view versus the prior view. If I go into here, it's giving you that, this is where the filters are. So if I search by the filters, that's going to give us our filtering options on the right. So you'll note that the default filter that's already in place is it's filtering by the account that we're in, the checking account. So typically what we want to do in these filters is then say, I need to add another filter because I want to search by one of the headers, typically transaction type, probably most common transaction type. And then I can say I want it to be equal to, and then I have to choose which ones. Now I can choose multiple of these, but if I just want to choose one, I got the credit card credit card payment. Boom. And so there's that, and say, okay. And so that filters us down to just the credit card payment. So that you might say, hey, look, I don't use the filters that often. And that might be the case. But sometimes you might need them. And that's when this stuff really comes into play. Because like we say, the journal entry will be the same on all the journal entries. It's really when there's a problem and you have to go into your checking account and kind of drill down on the information, try to figure something out, in which case this stuff starts to matter more, right? It's not going to have an impact on the actual what's being reported, meaning if you used an expense form, or if it was a deposit form, if it was a transfer, or if you use a transfer form, or if you use a credit card payment form, it's going to be the same journal entry, same end result on the financials, but have an impact when you want to drill down on the detail, typically in the general ledger, which QuickBooks calls the transaction detail, typically with the use of filters. When we filter, typically we want to filter by the transaction type.